Alright, today is Friday, May 27th, and we are back for another Trade of the Week video update. We're taking a look at pound dollar this week, where I caught a nice asymmetric risk to reward trade upon price pulling back down to this control point of the existing uptrend. We defined the demand zone here of the control point. We set an alarm as we waited for the possibility of price returning to this strong zone, again, which creates the biggest error and opportunity back to the upside for that asymmetric risk to reward, where we're targeting the supply zone above, which defines the higher high at that time of the uptrend. So when the alarm was triggered, we came back to the chart, we took a look. So we're going to drop down now to the 5-minute time frame to get a better look in detail at the divergence event that occurred at that zone, allowing me to understand that this demand zone was in fact, or at least of good probability, that the demand zone was going to hold for this trade. So when price comes back, we see this large push to the downside, creating a low, and then we see a subsequent lower low here where MACD was telling us that the momentum of these two consecutive lower lows in price actually were divergent in their momentum to the downside, where we observed this higher low in the MACD. So that was the MACD divergence event, created a nice wedge structure here in the price, which allowed for a nice smooth wedge pattern to be drawn. This upper trend line was broken on this nice bullish volume candle. When it closed above the trend line, we entered the trade. We placed the stop loss just a few pips beyond the low, and we were in it to the end. We were targeting the higher time frame 4-hour supply zone above, again, which defined the higher high, existing higher high at that time at least, of this uptrend. So we're in the trade. Again, I'm still refusing to move the stop loss to break even at any time. We're either going to get stopped out or we're going to win. That did become a little taxing because although we moved with good volume initially, price ended up moving sideways for quite a while. I was actually in this trade for several days. We had a pretty big pullback here. At this moment, I was worried that I would be stopped out, but then I just reminded myself, you know what, if price is in fact coming back to the demand zone for more liquidity to move higher, it will likely leave behind another divergence event into this demand zone, creating another opportunity for me to buy and ride with the higher time frame trend up to the 4-hour supply above. Ultimately, we did not push all the way down there, so I was able to stay in the trade. I do want to note, if I was to move the stop loss to break even, I certainly would have been stopped out on this pullback here. So I'm just monitoring these and keeping track of that. You know, how many times would I have been stopped out for break even when I could have won that trade by not doing movement to break even? So this is one of those examples where not moving to break even served me well, allowing me to capture a nice asymmetric risk to reward trade here of a little over 3.5 to 1. So a really nice trade. It did take a while, it was more of a swing trade, but ultimately we got there. We TP'd, and let's pull up the MetaTrader to take a look at the actual execution. So here is pound dollar. We're looking at it on a 15-minute chart. I'm going to drop down to the 5. So we can see that same divergence pattern here, the low, the lower low, the breaking of the trend line on the big bullish volume candle, and then ultimately pushing all the way to the 4-hour supply zone where we were able to TP. So closing at the target, and just a really nice asymmetric risk to reward trade there for pound dollar. That was the trade of the week. There was one other trade I'd like to pull up quickly just to show myself in the future here. Another example of a great asymmetric risk to reward trade as well. So let's pull that one up. I'm going to go to FXCM, Euro Dollar. So very similar situation, a nice 4-hour bullish uptrend. The control point here defined by this demand zone, and price pulled back to that demand zone. It actually overshot the demand zone, but it was the divergence pattern on the lower time frame that allowed me to not get trapped by this overshoot, and I'll show you what I mean. So let's drop down to the 5-minute to take a look at the pattern in more detail. Alright, so here we have it. We have this nice wedge pushing through the demand zone. I'm sure plenty of people assumed that, Euro had been falling for a while and there was a ton of sellers on board. I'm sure I would have seen it the same way if I wasn't observing the market in the manner that I am now. So we see the lows in price, consecutive lows, 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 all while MACD is telling us and painting the opposite picture of higher lows, higher lows. So divergent momentum in the pushes. These pushes to the downside are smaller than the previous, which is why MACD shapes out this way. It's just a mapping of the momentum of each push in the price itself. So as the momentum to the downside decreased, we started to gain that understanding that a reversal was on the horizon. At one point, I'm sure I was looking to these lows, or would have been, but I'm not on the charts at this time at 06 Eastern. That would be 3 a.m. here for me in Las Vegas, so thankfully I wasn't around to get trapped into these divergent lows and looking for a trend line break through this area. But instead, by the time I'm on the charts, 6 a.m., 5:30, 6 a.m. Las Vegas time, so 8 a.m. Eastern, the wedge had continued to develop. I drew the upper trend line. We had the nice bullish volume candle break the upper boundary trend line and close above it. And I was in the trade with a stop loss placed just a few pips behind the low point. And again, we're just letting it run. We know we're trading with the trend. We know we're trading a high probability reversal pattern on its own from the control point of the existing trend of the higher time frame, which at the time was clearly up. This was always a better probability to move to the upside than to break the level and continue lower, which would ultimately result in a trend change. So we see this move play out. It initially pushes higher with good volume, just like the other trade, then it pulls back. So once again, had I moved the stop loss to the break-even level, I would have hindered my ability to stay in this trade and ride it all the way up to the supply zone above. So we leave it open. Again, we're in this trade for quite a while, so that's something I'm starting to get familiar with. These trades are not quick. In all reality, we're trading the 4-hour trend. I can't expect my trades to be opened and closed within the intraday time cycle like I was previously with the other styles. So we do actually come back for more liquidity from that demand zone, just again showing the validity of this demand zone and how important it is. Look at these pullbacks right into the zone only to continue to the upside. So just confirming that I have my eye on the zone that is most important for this uptrend. And we see, London at this point, 2 a.m. Eastern, grabbing liquidity. Over here, this was 2 p.m. New York time, so late New York, grabbing liquidity. And this was pre-New York, who actually initiated the move with the divergence. Eventually, we move to TP, we get all the way there, and another nice asymmetric risk to reward trade, just solidifying in my mind that this is the style of trading for me. These are the trades that I'm looking for, that asymmetric risk to reward, and just constantly proving that I'm able to capture them. That's it for this week. Trade of the week was pound dollar. We did catch Euro USD as well. And take a brief look, Euro USD here on MT4 for the actual execution. And there we have it.